Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Welcome, everybody. Hope you guys had a great trading day yesterday. We are doing what we do each and every day, identifying potential breakouts and reversals from an educational perspective. Hey, real quick note, a couple people have asked me recently about the Daily Market Commentary and kind of what my setup is for it. And I used to say this every day, but one of the things that's important about the DMC for everybody to know is when I set these trades up every day and when we identify these levels for educational purposes, we are leaving the lines on the charts so that you can see what happens to the levels. Not every single level is going to turn out to be a great tradable area or a great tradable level, but we want to leave the lines on the charts so that you learn from experience over time what happens to these zones and to these levels. And I think that's important for people to see and to realize. So when I draw lines on the charts I leave them on there. They stay on there until they either hit or they break, or there's a reason to take them off, and typically I will take them off while I'm in the room. That way you guys can see exactly what my thoughts are and what we're looking at. Now, that being said, this is the third time I've tried to record this today, and my recording software keeps crashing on me, so there was one or two lines that I did already draw this morning that I will review why I did, but I think it's important for you to kind of see what it is that we're looking at. So let's go ahead and get rolling on the S&P. On the ES, we have about a 1.5 point move higher as today's impeachment day, if you will. And so I want to see if the House impeachment vote will cause a move in the equities markets, if that's why we've kind of stalled out here the last few days. May or may not be the case, but we put this potential breakdown level yesterday with a reversal down here on the 15-minute chart. And so it gives you a nice little day trade opportunity back to this 15-minute level. Now, this 15-minute level is an old area of resistance over here to the left, so we'll see what that looks like going forward. Next would be the Nasdaq level. Now, looking at the NQ, we have a breakdown right below here as well for the potential reversal. But you also could take a look at a breakout to the upside, right? When I look at this on a 4-hour time period, I mean, it's very clear to see that we've got kind of a bull flag pattern, with this high base breakout potential with price moving higher from here. So breakout one way or the other, I think, is okay today, provided that I get my third touch of this line. I got to get 3 touches of a line for a true breakout candidate. If I look at crude oil, so yesterday in crude oil, we had a breakout above this area here. We had a breakout above this area here, so we did get our breakout in crude yesterday. And one of the things that we did yesterday, and this is inside of what we do inside the Daily Market Commentary, we have updates at Traders Army. And those updates we do, we really want to talk about where do we move our stops in case price kind of stalls out at a level. Now, remember, we got our breakout above our line, and after 6 candles, we kind of had stalled out. So one of our areas, one of our updates, we talked about CL has moved enough to take the stop to 60, 67 and lock in some profits. And that's always going to be important, is looking for where do we place our stop losses and when do we lock in profits to manage these trades. Now that we've come back down, this area here then became a little bit of a demand area on the retest. And we got a little bit of a bounce away from that demand area, but a very weak one, which now sets up for price to break out back down. And I think we could break out back down and make it into this 59.65 area. In gold, we had a potential for a breakdown below this line here. Unfortunately, we didn't get any basing there before the breakdown on the hourly chart as we were looking at a potential breakdown below here. The basing didn't occur, and we just recently broke out to the downside. So now I've got to look above for a potential entry on a reversal, and I would look up here to the 15-minute time period, 1480 half by 1481 as a potential reversal point in here. Now, the reason I like this is because it's a big rally up. We base, we get another little rally up, we base, and then we move away. And so that becomes the setup that I'm looking for in that zone. In our bonds and currency markets, so in our bond markets, we have a little area here that I think we could see a breakdown coming from this zone. I'd want to see a little bit more basing in here before that breakdown occurs, but I think we could get a breakdown into this 128. Now, this is not a super great long area. This is really more of a price target for a breakdown below here. The reason it's not a super great long is because our big picture is very much to the downside, and more than likely we'll slice right through here. But we could at least use that as a profit-taking area for that breakdown. In the Aussie, we had yesterday. We talked about the fact that this level probably would not last very long, and it didn't. We moved our stop in yesterday's daily market commentary, and so now we've got another little potential breakdown point with a target somewhere down in here, which is the origin of this strong rally. Our euro. In our euro level, we talked about this as a potential breakdown point yesterday. But in order for a true breakdown, I need basing before the level. And right now we've returned to that area, but we don't have any basing in front of it. So I'm going to wrap my lines around this area up here, as this is something that quite literally has changed just in the last few minutes, as a better trade idea, I think, than trying to take the breakdown at this point. You're better off on the reversal. Canadian dollar. So yesterday in the Canadian dollar, we had a short off of this level right here. For those of you that watched the daily market commentary yesterday, we got a nice little move away from there, got us a nice little 3-to-1 move, and we've come back in and retested it again. And so now it becomes a potential breakout to the upside, provided that we get basing somewhere inside this level before the breakout. I need the basing in this region before the breakout. Great British Pound and Japanese Yen. So in the pound, we have a potential for a breakdown in through here, which is kind of what we're getting at the moment. We want to see a little bit of that basing in here, so price has a chance to continue to run down. If we do pop up, I really think this is a clean supply area right here where we could find a decent reversal. And then as far as the Japanese yen goes, we've come down a little bit off of our overnight highs. This sets up a potential reversal area down here, and then there's the gap fill level down in this region. So if you have any questions, please make sure you send us an email, support@tradersarmy.com. I appreciate everybody coming in with us today. Remember, no daily market commentary tomorrow as we have our live trade room. So if you're a member of tradersarmy.com, join us for our live trade room tomorrow. If you're not a member, go to tradersarmy.com, become a member today, and see what it is to join our live rooms and ask whatever questions you have anytime you want with some other traders and a community of traders that want to see everybody get better. So, all right, everybody, hope you have a great day, and I will talk to you all soon. See you.